Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, January 22nd. The Information published exclusive reporting that Apple is developing an AI wearable pin. We will talk to the reporter behind that scoop. We'll also have a wider conversation about the company's AI strategy, despite the department's lead, Craig Federighi, plotting a more cautious course around AI. We'll then turn to another big story this morning, the legendary TikTok deal that will see the company sell its data security business to a U.S. company is expected to close. We'll also talk about the latest in OpenAI and Thinking Machines Labs talent war. We're also going to talk about OpenAI's advertising play with someone who has an inside look at how brands feel about all this, and we will wrap the show with the CEO of General Fusion, the company today agreeing to a merger that will see the firm go public with a SPAC, a $1 billion valuation. We have got a lot to cover, so let's get right on into it. The Information published exclusive reporting that Apple is developing an AI wearable pin the size of an AirTag. I talked with Wayne Ma, one of the reporters on the piece, about the details. Here is that conversation. Wayne, welcome back to the show. It's great to have you here.
Hey, Akash, how are you doing?
So what do we know about this pin so far?
It's still very early in development, but I was struck by how small it is. It has two cameras on the front, a button on the side, speakers, microphones, and wireless charging on the back. And I guess you're supposed to wear it similar to an AirTag. You need to attach it either to your clothes or to a bag.
Now, this resembles something like the Humane pin that we heard so much about. I mean, we know what happened with that company, right?
Yeah, I mean, conceptually, they're both, I guess, pins, but the main pin was a bit different. It had a projector. It was it was very bulky. It wasn't meant to work, with a phone. And I think this new Apple pin will likely work with an iPhone. It's smaller, it's sleeker, more lightweight.
And so what do we know about what this pin is supposed to be able to do?
Well, presumably it'll do things that most AI assistants do. You can talk to it, ask it questions. Maybe with the cameras, you can take photos or videos, send messages to people. But I think at this stage, it's not clear, but probably it'll just help you understand your surroundings better.
And is this a direct rival product to what OpenAI is rumored to be building as well?
I think it is. I think that Apple's seeing the writing on the wall that consumers really want to, use AI constantly, have something that's always on, something that's recording, or being able to, show what you want to be able to show AI what you're doing. And so, they're rushing this product to market, I think, partially because OpenAI is going to be doing the same in the next year or two.
So we've talked on the show about the challenges that Apple Intelligence has had in terms of really impressing customers and users of the iPhone. How do you square that with then the idea that they're rushing to market, like you said, to deliver this pin? I mean, there's got to be some tension there, right?
Yeah, so I think one of the big reasons for some of the delays in some of these Apple AI products is that the software is just not ready, right? Siri is just not ready. In fact, Apple delayed upgrades to Siri last year, and they hopefully plan to roll them out this year. And so I think that Apple's recent partnership or announcement that they were going to use Google's Gemini to kind of power their underlying AI models might have emboldened them or given them the confidence, at least, to try these sort of new AI products, knowing that they can likely deliver them on schedule this time.
So they're leaning pretty heavily on Gemini to sort of carry them through this next phase, even potentially for their wearables and hardware.
Yeah, I think so. I think that's the difference now.
And then if you think about the scale of this bet, I think on one end, I'm struck by how much work it took to deliver a product like the Vision Pro and how intricate that was. On the other end, you have AirPods, right, which seem to be sort of less of a departure from what Apple knows how to do. So if we take that spectrum of AirPods to Vision Pro, where do you think this wearable pin falls on that spectrum?
Yeah, they're very different. Right, the Vision Pro took more than 7 years to develop, and obviously AirPods, were a shorter time, but also the Vision Pro cost $3,500, and I don't think this pin will be anywhere near that. And so I would say it's closer to maybe somewhere between AirPods and an Apple Watch than it is to a Vision Pro or some of these other products that Apple has in the pipeline.
And I mean, do you think they'll pull it off? I mean, like, what? Just give me you're an avid consumer of Apple products. I mean, what do you think that will happen with this?
I think it really depends on what the capabilities are. What are people's expectations in 1 year or 2 years about what AI can do? Is everybody going to be wearing smart glasses, or are they going to have AI pins or pendants or things like that? I think this is kind of like a bet on the future that Apple doesn't want to be left behind if people start to, find other ways to interact with the world and with AI other than their smartphone.
I want to ask you about a Bloomberg story that also was making headlines this week. So there was reporting that Apple is also looking to revamp Siri, which we've reported on as well. But now it might resemble more of a literal AI chatbot assistant. My read on it was maybe something like what Microsoft has with Copilot. I was trying to figure out what direction they were going in. What was your reaction to that story?
Yeah, I think Apple has long had aversion to chatbots. They didn't think they were that useful. And of course, ChatGPT kind of changed that, right? People really like ChatGPT. They want to talk to it. They want to get advice from it. And so I think it was inevitable that Apple kind of caved to this idea that you do want this companion or somebody you can talk to back and forth and have back and forth conversations. People have definitely proposed that within Apple for years for Siri, but were shot down. And I think this actually does pair well with this new AI wearable pin, because, if you wear this pin, maybe it is your companion and something that, you can talk to regularly.
Hmm. And last question for you. I mean, what does this tell you about Apple's strategy at large here? I mean, we've talked about the legacy iPhone business. It's not going away. We've talked about the big bets, the Vision Pro. I mean, what does it tell you about the company's overall strategy?
Yeah, I mean, I think that they are trying to prepare for a post-iPhone future. And so they're making lots of hedges and exploring lots of different products that could possibly be that post-iPhone world. And so this AI wearable pen is kind of one of those bets.
Great. Well, Wayne, I want to thank you for coming on. That is Wayne Ma, our reporter here at The Information. I want to thank you for joining us.
Thanks for having me.
Okay. As big tech pours colossal sums into AI, one major player is moving more cautiously. Apple, the company's AI lead, Craig Federighi, is known for his frugality and for initially being hesitant to dive into AI. Now he is at a pivotal moment as Apple tries to keep pace with rivals while sticking to a more measured strategy. The Information published an in-depth story looking at this strategy. I want to bring on our Apple reporter, Aaron Tilley, who was one of the reporters behind that piece. Aaron, welcome to the show. It's great to have you back.
Hey, good to be back.
So, what made you want to write this story in the first place?
Yeah, I mean, Craig has always had a fascination for me. I think he's been this like pivotal person inside the company, but not. I mean, people know of him because he's always doing the big part of the announcements, but I don't think he's like. I haven't really had a chance to dig into him as much as I wanted to over the years covering Apple. He's always been this hugely important person inside the company. So I think just he's become more important AI. He's taken over increasingly more of AI, and he's just this crucial person kind of figuring out Apple's future right now.
And how has his role evolved now as Apple has started toying with AI to now going headfirst into AI?
Yeah, so he's first it all started last year, early last year when he took over Siri. The Siri team had been delaying the launch of this big overhaul of the voice assistant, and he took over the entire endeavor. And then this past this over 2 months ago, he took over the rest of the AI team. So that includes all their sort of research and development, and in all their efforts to sort of internally develop the AI models themselves.
Now, despite all this, according to your reporting, he was initially a bit of a skeptic about AI, right?
Yeah, for sure. I mean, like over the years, like he has just shot down over and over efforts to build AI features inside Apple products. He is a big skeptic of just the reliability of AI inside Apple products, and also just the privacy and security components are a huge issue for him because those are really big issues for him. And he's just like he just needs predictability in his software, the software he likes. So he's always pushed back on integrating AI in his products.
And has he come around to it now, or is he still adopting that mentality?
He definitely has gotten on board. I mean, I think just the GPT moment, like the rest of the tech industry, has really kind of forced a lot of these people, the skeptics' hands on these issues. You just can't ignore it now. Just the success of AI and these LLMs, these chatbots. So he's had to get on board. Both, I mean, for a political reason internally for Apple, I think from the board level down, there's this need they know they need to get on board, and so he needs to play that game. But I think, he has seen, I think, the significant progress that AI has made.
But you talked a little bit about his approach towards investment, and AI, we know well, is a very expensive endeavor. And so it strikes me as a bit of a tension here. If you have an executive that is known to be a little bit more hesitant to spend heavily on investment that may not pay off, and then you have this trend that takes a lot of money, how has he come around to that? Has he kept that sort of frugal mindset with AI? And I mean, we'll get to the Google deal in a second, but how has that changed?
Yeah, I don't think anything's gonna change Craig's mentality on spending. He is, his frugality is in his core DNA, both in his personal and professional life. He'll scrutinize a team's budget down to the snacks they can buy. I don't think anything's changing that for him. So he's gonna be really, I think, consistent on that and look for ways Apple can efficiently kind of move in the AI era.
Okay. So now we have this Google deal that Apple has signed. It's the licensing deal for Gemini. It's going to power um, many of the new features behind Siri, if I'm not mistaken, as it comes out. What do we know now about Apple's own internal efforts to develop their own models, and how does Craig feel about those efforts?
Yeah, that's been a big point of tension between him and this internal AI effort. The team building that is, under a lot of pressure. There's a lot of sort of frustration, that team kind of having to, work so hard on developing this in-house, and then for Apple just to move to an external model like they've done. But they are still working on internal models, but much smaller models that will work on device, with the goal to eventually, do it all in-house. That's Apple's sort of strategy very consistently over the years. If they need to do something, work with an external supplier of some critical piece of technology, they'll do it, but eventually they'll always in-house it. This is obviously different than their whole chip endeavor, which has been very successful on that front, but that's the eventual goal here.
And you talked about the tension, between Craig and these teams. So what is his tension with them exactly?
He just doesn't think they're moving fast enough. Their quality of models aren't good enough for Apple, and he just doesn't think it's ready for prime time. So, and they think he's not, on their end, from their perspective, he's not doing a good enough job shrinking down the models they're offering to work on Apple devices. So there's a bit of pointing fingers at each other for who's to blame on this front. But they they're trying their hardest with what the resources they have inside Apple.
And how do you think this story inevitably plays out in the long term? In the short term, they have the Google deal, so there doesn't seem to be a huge rush. But how do you think it goes?
Um, I think I think they're going to be dependent on I think Apple will be dependent on Google and pretty much the not the long term, but the medium term. I mean, it all depends. First of all, does AI really commoditize? Like, are these LLMs going to get cheaper and cheaper? And if that's the case, I mean, they're going to be able to insource it eventually. But certainly in the medium term, it's going to be Google is going to be a critical partner in Apple's AI work going forward.
Great. Well, Aaron, I want to thank you for coming on. That is Aaron Tilley, our Apple reporter here at The Information. Okay. TikTok is expected to close the sale of its data security arm in the US today, bringing an end to the years long saga surrounding a potential TikTok ban. This story has been going on so long that it really begs the question: how popular is TikTok right now, anyway, and where does it fit within the creator economy ecosystem in 2026? For more on that, I want to bring on Josh Kaplan, the co founder and CEO of Smooth Media, a company that connects creators and brands to set up long term brand campaigns. Josh, welcome to the show. It's great to have you here.
Hey, gosh, how's it going? Thanks for bringing me on.
I'm doing well. So, we are here. It's 2026. Okay. TikTok is not banned, it is still very much a platform that people use and creators are still using it heavily. What I want to talk to you about is look, we have this restructuring deal, it's set to close. I mean, where is TikTok right now in the creator economy? I mean, and we'll start with the creators and the audiences separately, but do creators, are they still loving TikTok the way they used to 3, 4 years ago?
Yeah, I mean, to your point in the opening, it took way too long for this deal to actually close. From the beginning of the conversations till now, I think a lot of creators were in a bit of limbo where they weren't really sure. They had the hot start out of the gate with COVID and the explosion of creators that were coming on during the pandemic. The Creator Fund was a really great first step that TikTok was able to incentivize creators to say, hey, you can come on and make money. And since then, and since all of the different negotiations, I think TikTok has really lost a lot of ground and a lot of favor with creators. It's a really hard place to have a consistent audience. There aren't that many revenue streams that are sustainable comparatively to Instagram or YouTube. And you can't hold your audience. It's easy to go viral. It's easy to get that one shot of uh, amazing exposure to the algorithm. But after that, how do you continue to build on that? That's the big question that is still yet to be answered. And I hope that this deal is the start of a new era and that they look back at their creator program and they really start to prioritize it. I've got a couple concerns. I don't know how much the platform is built for really creating professional creators right now, as opposed to getting just a ton of people to make a ton of content and feed TikTok shop. But that's a further question that we'll see as time plays out.
So I want to get to TikTok Shop here in a second, but you talked about the short form content being a little tougher for creators to actually build lasting audiences. So my question for you is this a TikTok specific issue, or is this an issue with short form content broadly? And do we have the same issue on Instagram with Reels?
It's a good question. I think Instagram has a more robust ecosystem. YouTube, with their Shorts program, has a more robust ecosystem where you can bring people into your long form. You have memberships, you have all sorts of other things that are able to monetize. TikTok is really just not conducive to building that community. Instagram, you can still have different DM channels. You're able to see that difference in the comments. And the creators that we talk to, anybody who's really spent a couple of years on TikTok wants to start long form. They want to get into podcasts. They want to move off of it. And so just anecdotally, we're seeing that TikTok just doesn't have that staying power in order to be truly the only place. I think any big TikTok star that we've seen over the past couple of years has grown beyond the platform and doesn't say, hey, I'm a TikToker anymore. The same way that you maintain the identity of a YouTuber. So, but relatively speaking, no, I think that it is a TikTok specific problem that they need to fix.
And what about viewers? Are viewers still flocking to TikTok the way that they used to?
It's digital opium. This is what they've been selling for years now. Like, this is so addictive. And I think that if you talk to the audiences and we see what people are saying, this is the first one that gets deleted. When you say I need a social media break, TikTok is the one that goes, I gotta take a step back. I gotta get off the drug for a little bit. And that to me says a lot about it. That I imagine that we all know that, the addiction feels good in the beginning, but after a while you go, I need something else. And there's something healthier about having a relationship with the creators that you subscribe to, being able to name them, being able to tell people who your favorite creators are. A lot of people, when you ask who's your favorite TikToker, you go, I've got no idea. I just know that I like watching it. And I think that says a lot about the health of the platform.
Now, you mentioned TikTok Shop, and we've done some reporting here at the information about just how heavily TikTok plans to lean into e-commerce, and that is certainly a way to diversify the offering beyond just the short form content on its own. How is TikTok Shop right now as a product from your perspective? Is it even from brands as well who you work with? I mean, do they view TikTok Shop as a viable way to actually get the word out?
Most of our clients are not using TikTok Shop, but that's because of the nature of the Smooth Media business. We're working with a lot more enterprise level businesses selling B2B services. But from what I hear from other peers, TikTok Shop is fantastic for consumer products. This is an incredible version of QVC. And that is amazing if you're a marketer to be able to get that type of conversion, you got to be able to do that. That's your duty as a marketer to go and find the best way to distribute your product. But if you're a creator making content, I wouldn't in good faith suggest that TikTok shop becomes a meaningful part of your business. I think that you're better off finding other areas as a creator to be sustainable. And so that relationship between the platform and those building the videos on top of it, if I were TikTok, I'd start to do a lot of work to make sure that I can make this a stable place to continue feeding that TikTok shop content.
And you mentioned QVC. Is the traction that TikTok Shop is seeing, does that at all connect to the emphasis that they have put on live content as well? I seem to, when I think of live content, I mean, I certainly think of X and the shows that pop up. YouTube Live is obviously there, and we'll put Twitch and stuff like it in a different box for the moment here. But like if we talk about the big social platforms, I, TikTok seems to be prioritizing live a lot, right?
These are all just so big, it's so hard to fathom. And the amount of companies that are doing live shopping or just not or on demand and you can just scroll and find it, that's not where we spend a lot of our time. So I can't speak too specifically to it. But from what I see, this is just such a behemoth of a way of moving product and being able to market product that you got to take it seriously. If you're a marketer, you can't ignore it. But that's not where we play as a company. So I'd refer to a future guest to
Yeah.
be able to tell you more about that one in particular.
So last question for you now. Let's get back to the deal here. I mean, the deal we've talked about on the show how the deal is really for a specific back end part of TikTok's business. It's to do with data security. It may not have been the overhaul that I think people thought it might be with respect to the TikTok platform. And so, prediction wise, looking ahead, I mean, how do you think this deal might change the future of the platform? Where do you think the platform will go overall? How do you see it changing?
It seems incredibly unclear. I'm very let down as somebody who has a business within the social media world, as somebody who is an American, that it took so long and that this is where we landed. I have much higher expectations for our systems to be able to get TikTok into a healthier place. I hope the data has a better safety situation. I hope TikTok changes dramatically. I hope that the Oracle ownership and the other big money coming in is able to really say, hey, we now need to go change the product in many, many more ways. When this first became a big issue on the public stage from a legislation perspective, a lot of career TikTokers came out and said, this is how I make a living as an American. I need you to help me. I need you to protect me. We're not done helping those creators. And us as a business world, us as the political world, we need to be able to force even more change. If this is where it ends and all we say is great, the data is stored in different data centers on American soil, I would be very, very upset. I don't know if I should be optimistic about it, but I hope that things look a lot different a year from now, 2 years from now.
Great. Well, Josh, I want to thank you for coming on. That is Josh Kaplan, the co-founder and CEO of Smooth Media here on TI TV. Okay. OpenAI is restructuring its org as Barrett Zoff, the Thinking Machines Lab co-founder who left that company, has returned to OpenAI. Our AI reporter Stephanie Palazzolo has the scoop on where Zoff will sit at OpenAI and other inside details about OpenAI's new org structure overall. I want to bring on Stephanie to tell us more about what she has learned. Stephanie, welcome back to the show. It's great to have you.
Thanks. Great to be here.
So where is Barrett going to be sitting at OpenAI now?
Yeah. So, as my colleague Aaron and I reported yesterday, Barrett is going to be leading OpenAI's push to sell AI products to enterprises, which is something that so far Anthropic has really dominated in, but has clearly become a much bigger priority for OpenAI in recent weeks and months. And we see a lot of execs like Sarah Fryer, talking very publicly about their desire to want to sell more to businesses. It does feel a little bit random just because, Barrett is most well known for being a researcher, but it's clear that enterprise is very important for them, and putting maybe a high profile person at in the charge of it could be a strategy there.
Well, and enterprise is clearly how they need to focus on enterprise a little bit here to compete with the likes of Anthropic, right?
Yes, definitely. So, I think right now the way that it's set up is OpenAI is obviously most well known for its consumer product, ChatGPT, and Anthropic is more well known for selling to enterprises. But, uh, you know, OpenAI has obviously done incredibly well with ChatGPT, but it seems like over time growth has kind of slowed a bit there, just in terms of, just even reaching the kind of limits of like reaching all the consumers that could be users of that sort of product. So I think at this point, OpenAI is definitely pushing more into enterprise as just a way to continue growing very quickly and as a new source of sales.
Now, one of the most interesting parts of your reporting is you got some details on how the overall org structure at OpenAI is changing as Barrett Zoff comes in. Hard to tell which came first in terms of chicken and the egg. Was it Barrett coming back?
Yeah.
Was this happening all in the first place? What do we know about this new structure that OpenAI is going to be on?
Yeah. So, as we wrote yesterday, Fiji Simo, who is currently the CEO of applications at OpenAI, basically sent out a memo to staff saying that the company is moving to this new structure known as kind of a general manager structure, where basically you have one leader who's in charge of each of the product groups. So these are things like ChatGPT, Enterprise, as I just mentioned, Codex, which is OpenAI's kind of coding tool, and ads. So some of these things are not that surprising because it's basically just a continuation of what they previously had. So specifically with ChatGPT and Codex, the people leading those are basically who have already been in charge even prior to these changes. But there were some interesting details. So specifically Barrett leading enterprise, as we just talked about. Also Vijay Raji, who joined OpenAI after his startup Statsig was acquired last fall, and he's a longtime Meta vet. He will actually be running ads at OpenAI, which we found to be pretty interesting. Another interesting detail is Brad Lightcap, the COO of OpenAI, will be kind of stepping back from running product and engineering for enterprise as Barrett takes over, and he'll be focusing more on quote unquote commercial fu- functions. So lots of changes, but kind of the point of all this, as Fiji wrote about in her memo, is to basically tighten this relationship between product and research at OpenAI so they can influence each other more. And this is something that we've written about a lot, especially in kind of recent weeks, like this natural tension that exists between product and research at OpenAI and sometimes the conflicting incentives that both sides have. So it seems like Fiji and the reorg is trying to combat those kind of uh, conflicting incentives in some way.
And I just want to understand here the idea that this addresses the conflicting tensions between what is good research, what is good product. I sort of see this GM structure as OpenAI growing up a bit and sort of creating these mini businesses around each application, which is exactly what Fujisimo came in to do. But I mean, just riff with me here. I mean, how is it that you think this GM structure gets at that tension between research and product? Is the idea that you would have, I don't know, researchers working with product engineers side by side within Codex, within ChatGPT? Did you get any color there?
Yeah, so I think essentially the idea is that each of these teams will have, product people and also researchers working together under the umbrella of the overall product. So
One big happy family.
exactly. Versus, I think today the structure is more kind of just like, hey, research is building these cool models and reasoning models and coding models and kind of doing their own thing and following whatever seems most interesting to them. And then the product teams kind of just get these models and they're like, okay, now I have to make a product with this. So it on one hand, it makes sense kind of have them communicating more with each other and product saying, hey, this is like a product idea we have. How can this kind of work in with whatever research ideas you're already thinking about and vice versa. Um, but on the other hand, it does very much feel kind of like a big techification moment of OpenAI. And I think people that originally joined the company to like make super intelligence and cure diseases and colonize Mars, like being in an org that's called like the ads org or like the enterprise org feels a bit different from like, hey, we want to create, super intelligence.
Right, right. Very quickly, I do want to talk about an Anthropic story that we published today as well. But what is the latest on the saga at Thinking Machines Labs? I mean, we have this big move. Barrett is gone. Three of the co-founders, I think, have left. What's the vibe over there from what you're hearing?
Yeah, no, it's been a really crazy weekend. So, so far we've reported that, 5 people in this kind of latest wave have left, including Barrett and another co-founder. And that the third co-founder you're mentioning, Andrew Tulloch, left a few months back to go to Meta. And out of this latest, wave of 5 or so people, 4 of those folks have gone back to OpenAI, which is, pretty shocking stat, to be honest. And yeah, so over this weekend, I think there were a lot of really interesting and quite dramatic stories about what exactly went down before these departures happened. It seems like there were a lot of kind of personal issues going on between Barrett and Mira specifically. So on one hand, this does seem kind of like a specific kind of personal disagreement between two people at this company. But I think the bigger effects of that is that we're seeing other people start to leave. And oftentimes, I think this can kind of cause like a stampede of people leaving who are um, confused about kind of where the company is going. And another important thing is that all this is kind of happening while Mira is trying to raise a new round of funding for the company. So she's trying to raise anywhere between $4 to $5 billion at a $50 billion price. And a lot of investors that we're talking to are not really sure what's going on with that and are a bit, concerned at what might happen to that process given all the chaos kind of happening in the last couple days or so.
Let's turn to a story that our colleague Shri Mupidi published today about Anthropic. We have done some great reporting here at the information about the gross margins of all these AI companies. And Shri's reporting found that actually Anthropic is projecting a slightly lower gross margin profile than what they initially had, maybe closer to 40%. Initially, maybe it was closer to 50%. I mean, look, we're talking still overall profitability is hard to come by in this business. But I just want to ask you broadly, as you look at that story, what do you think this says about what's happening at Anthropic? Is this less about Anthropic? Is it more about inference costs overall? How are you thinking about it?
Yeah, I mean, training and running AI models is very expensive, first of all. I think that's been obvious throughout all this. But I think it really goes to show that even a company like Anthropic, that's been seen as pretty financially careful, a company that doesn't have a huge free user base in the way that OpenAI does, the cost of, training and especially running these models can be very high and also somewhat unpredictable. So I think it just goes to show, yeah, even a company like Anthropic that's been looked at uh, as being like a pretty conservative company with that sort of thing. Like, yeah, it's really expensive for them too.
Great. Well, Steph, I want to thank you for coming on. That is Stephanie Palazzolo, our AI reporter and author of AI Agenda here at The Information. Okay, OpenAI is charging ahead with its advertising play and will begin testing them in certain ChatGPT tiers in the coming weeks. The information reported exclusively that the company is also lining up a slate of early advertisers. To break this all down, I want to bring on Keely Taylor, founder and principal consultant at Keelstar, where she advises brands on their marketing playbooks overall. Keely, welcome to the show. It's great to have you here.
Thanks so much for having me.
So, are advertisers excited about OpenAI's ads? How are they feeling about all this?
So, in the 20 or so years that I've been working with brands, they usually sit in two camps. One of those camps is, I want PR, I want my name in lights, please make me famous, I want to be the very first. And they don't tend to have really stringent KPIs when they want to be first. The others are much more cautious. And I think we'll probably see more of that kind of cautious conservatism given the fact that AI has lots of unrealized regulatory considerations as it relates to things like copyright, as it relates to things like IP. And so it's not quite the same as the dot com days where you could build a website, but it was completely in your control. And what we've learned from social media around context and brand safety and brand suitability or brand adjacency, I think is going to come home to roost in chat environments with OpenAI ads as well.
How are these brands thinking about measuring success here with these advertising plays? Certainly because they are newer, it's hard to know if people are going to click through on things. Do they think more impressions will be the goal? In your early conversations with these companies, how do they think they'll measure success?
So certainly being in that consideration set, if you think about it as that next digital shelf, impressions matter. I mean, if you think about how manufacturers have long-standing relationships with retailers around shelf space, I think that that's one of the ways with which brands are going to be thinking about this opportunity. That said, the second that you are able to make a purchase, you somehow find yourself competing against those things that are bottom funnel, direct response, tried and true tactics, things like Amazon ads, things like Google search ads. And I think what you'll find is that people are going to be using these chat interfaces for all different levels of the funnel. And the intent, it's going to take some time for OpenAI to really discern the intent and the usefulness and the appropriateness of different types of ad placements into these contexts.
And then I guess the thing that I'm thinking about is that the same way that these ad tech ecosystems have popped up and these auctioning systems have come up around digital advertising with search, for example. I guess there's a big question around what that ad tech even looks like for chatbots and whether or not it will be an auctioning system or how pricing even works.
Yes. I if recent history is any indication, auction-based pricing certainly feels like the way to go. That said, there is going to be some amount of user education that has to happen in terms of what types of assets, how are those going to be brought into the fold, and then there's a lot of conversation OpenAI had early, although they've taken a bit of a pause around agentic as it relates to the ability to interact within their interfaces. So there's an interesting confluence of maybe all the robots are just going to figure it out right away on top of an algorithmic auction based pricing model, or you might find that there is some amount of direct sales support if you see mid-size brand entrants that are coming into the fold, but you're not seeing those premium players. Sometimes that um, can hurt the perception of the premiumness of what is going on in the interface from an ads perspective. I think we've seen similar criticisms with TikTok shops not always being the most marquee brands that are in the fold there, and then um, average consumers not really being sure about the credibility of purchases that might happen in that environment. So it really kind of depends, birds of a feather, who ends up going to OpenAI, who is more willing to be accepting of the risk appetite in a chat interface from the early days on.
We were talking with an analyst yesterday about Netflix's advertising ambitions, and the question I had asked him was, "Hey, Netflix's advertising business, by some estimations, will double this year on its own." And it's still pretty early in its days, but I asked him, I said, "Do you think that there's a risk that AI advertising in the long run could eat into something like Netflix advertising?" And the broader question I wanted to ask you is, what is the overall state of the digital advertising market right now? Is it still a pie that is growing larger and accelerating, or is this a story where you think the budget that brands spend on AI chatbot ads will have to sort of be diverted from something like deciding to advertise on YouTube or on Netflix or on search even?
So there certainly is a lot of conservatism as it relates to brand spending today. I think in recent reporting, and poor me for not remembering the source to share it with you today, a lot of the stockpiles of manufacturers that had inventory prior to tariff-based pricing inflation, that's starting to run out. And so the types of things that are going to happen are going to be pullbacks on digital media investment in the event that there's consumer pullback or the lack of consumer confidence in their ability to spend in the economy. And so I think there's a double-edged sword for basically everything that operates outside of the TV upfront or some of the things that are super premium and have cancellation clauses is You can turn off Google search today. You can turn it back on tomorrow or in 15 minutes. So I think that there is going to be some amount of trial this year. I can't imagine, given the nascent KPIs that will be available, the lack of third party validation or verification of those ad environments, and the fact that there still is, well, there are usage numbers that are significant for all of these different chat interfaces. The actual use cases are relatively straightforward, and many of them are not necessarily associated to purchase or right at that path to purchase. So where they're going to end up fitting in the funnel, and for marketers to figure out what the next best alternative dollar to spend is, I think is going to take some time, and I think that that's going to vary by sector or industry as well.
Great. Well, Keely, I want to thank you for coming on. That is Keely Taylor, principal consultant at Keelstar here on TI TV. Okay. As the race to build the first viable fusion power plant heats up, one company is making a bold move to bring its vision to the public markets. General Fusion just announced a SPAC deal. Joining us now on the announcement is Greg Twinney, CEO of General Fusion. Greg, welcome to the show. It's great to have you here.
Gosh, pleasure to be here. Thanks for having me. It's an exciting day in Fusion.
It is it's always an exciting day in Fusion. Fusion is it's one of the hot topics, no pun intended, here on the show. So the big question that we've been talking about here is when Fusion will be ready to scale, when ultimately it will be able to make a dent in all of the power demands that we hear so much about with AI and beyond. Tell us where you are in your journey in that goal.
Right. Yeah. So, it's important that we solve fusion. There is a massive demand for energy. You can't open the newspaper or look at the news or anything without seeing that there's just a huge demand increase coming for energy. AI, data centers, electrification of everything. There's just an enormous demand that needs to be satiated, and fusion is the answer to that problem and up to the challenge. People have been working on fusion for decades. We at General Fusion are a private company, a growth company that started over 2 decades ago, working towards ultimately putting fusion energy on the grid. And we aim to do that by the mid 2030s. We're doing a lot of progress over the last couple of decades to de-risk that. And now with this announcement, we fund the last leg of a really important science milestone program called LM26 that we have. And this announcement is going to allow us to hit milestones, fund the program, and bring other investors to the table to share in the journey.
What sets you apart from all the other companies that are doing fusion?
Yeah, it just there's 3 things really to think about when you think about where we are versus the rest of the others trying to solve fusion. First is the approach, starting with a technological approach that has an end in mind for commercial fusion is critical. Demonstrating fusion has been done, national labs, academia. It's been proven out that the science of fusion is possible. But the how you do fusion is what matters and what's differentiating for us. We took an approach right from the beginning that we wanted to create fusion conditions in a way that could be scaled, practical, viable, economical, all of those things right from the beginning. And so, step by step, milestone by milestone, we've been de risking in a decoupled, capital efficient way this path to a commercial power plant, not just commercial scale demonstration.
And the hope is that you're gonna get power to these customers this year, is it?
No. So, what we're aiming to do over the next 3 years is demonstrate fusion conditions in our commercial approach to fusion.
Okay.
And that is, yeah, through industry milestones. In particular, in the industry, it's really all about temperature and density of these plasmas that you need to have in order to create the fusion reaction. And for us, we've got a machine built called LM26, which is the culmination of 2 decades of work. And that machine is designed to achieve industry first milestones in fusion. So, 10 million degrees, 100 million degrees, and ultimately break even fusion conditions inside of this machine. And for us, this is a very practical approach that allows us to overcome the barriers of moving from just demonstration of fusion and science for science purposes to actually turn what we're doing into a fusion power plant. And so that's targeted to be on the grid in the mid 2030s.
So why do you need to be a public company to do this? You talked about the last leg of financing, and so there's obviously the access to the public markets as a source of funds. Could you not raise that money privately? Does it have a benefit to you to be a public company? Why did you want to go this route?
Yeah, so for us, being a public company is another first. Moving first into the public markets is important for us for a couple of reasons. One, as you mentioned, it allows us to fund this program. The capital we're raising through this announcement, the $100 million of pipe, will allow us to fully fund our LM26 program and achieve industry first milestones. The 1 keV, the 10 keV, and those break even conditions, Lawson, will be funded with that pipe capital. So capital certainty was important, and this deal allows us to get that. The
And
second thing,
oh, keep going,
sorry,
keep
yeah,
going. Sorry,
I
I
was
didn't
going to
mean
say,
to keep going, keep going.
yeah. So, and the second thing is, being a first mover to the public markets is allowing us to let in new set of investors, a broader set of investors, invest in fusion on the cusp of these incredible milestones. Prior to this, investment in fusion was a fairly exclusive club, and now this opens it up to a broader base of investors, ultimately that are going to benefit from the long term transformation that fusion is going to bring.
Are we going to see a wave of these companies going public? Because we saw another fusion company merge with the Trump media and technology entity. That was their way of going public. I mean, we've seen this time and time again with certain sectors where, and it seems to be, the really long term bet, moonshot type companies. I mean, when one goes public, everyone else kind of follows, and maybe it's a funding thing, but I mean, in your orbit of executives and founders, is everyone trying to take their company public?
The prize for fusion is massive, right? The market size that has been estimated by you name it, it's in the $1 trillion range. And the companies that are first to achieve commercial fusion and take a big chunk of that market, everybody's moving fast. There is a race happening for sure. And so I would not be surprised if others also move to the public markets if they see the same advantages that we do. Um, what's differentiating for us is we're a pure play, and B, we've got a machine, a team, and now the capital to hit some milestones at a much more capital efficient way than what we see anybody else doing on the planet. And that for us is really exciting and something we're very happy to be bringing to the market today.
And given where you are right now and the 3-year goal of getting power to customers, how did you land on $1 billion for the valuation?
Yeah, so the valuation was set by the combination of our SPAC partner Spring Valley, who is the experience track record of bringing companies like ours to market, and the pipe investors that came in and committed capital to this deal. The $105 million of pipe capital that was committed alongside of this deal. The combination of all that is sort of how you end up with that deal valuation.
Great. Well, Greg, I want to thank you for coming on. That is Greg Twinney, the CEO of General Fusion here on TITV.
Thanks.
Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. I'm already excited for our next show tomorrow. Have a great rest of your Thursday. Bye-bye for now.